Hey everybody, welcome back. It's Thursday and there's a few interesting things happening. We've got a lot of news to get through. So let's jump in. And the title is Who Beats Bitcoin? But we'll also talk about a bunch more stuff too. So let's jump in. Whoops, not now. Don't do that. Don't do that. Yeah, they broke something. Before we jump in, none of this is investment advice. And of course, if you want to get smarter, this is the place to learn. Guaranteed to learn something new every single day. So the story today, we're going to talk about kind of recession indicators, what happened in August. Today, actually, as we're looking, AI stocks are all up. Looking at my charts here, Meta, Google, Tesla, Nvidia up, and crypto is taking a dump. But that's typically what happens, you know, the mean reversion after the great news, everything kind of trickles back down to earth. But there's also some hidden news you probably haven't heard. So let's just jump in. Tons and tons of topics today. First of all, it's been a very tough August for Bitcoin, down 9.7% so far, because we do not close for another 3 hours and 13 minutes. And then we'll know the monthly close. But either way, it's going to suck. And, you know, my little friend here, the polar bear, has been there for quite some time. And of course, we knew August, September, typically historically they're bad. But let's jump in and look at some more stuff. Now, we're going to look at a little bit of stock market stuff and then get back to crypto in a second, because I want to talk about this August topic. It has been a tough August, but it was really ugly around the middle of August, but it rebounded very, very well. A lot of, again, AI stocks, Salesforce, etc., brought things back up. And so far, the S&P 500 is down only about 1% by my calculations. Per their chart, it looks like it's break even, but per my trading view, it's 1%. But give or take, the minute you measure it, of course, it can be different. The Dow, of course, didn't do well, but the Dow is full of what I call stodgy old stocks. Now, this is my S&P 500 tracking sheet that goes all the way back to like 1928. And it's nearly 100 years of data. Every single month close, and I update it. You can see here August is down fractionally by my math, but so far that's to be expected. Now the problem is we are going into the ugly September month, which can be very nasty indeed. So we'll watch that carefully. But you know what? Some people do believe we are in a new bull market for equities. And it's been driven by this AI revolution, which we've been talking about incessantly since 2022. Anywho, there's another piece of hidden good news too. This is from Eric Balchunas. And he says, still no delay announcement for BlackRock, even though theirs was due before Valkyrie's and they're using the same exchange. Also no Fidelity or Bitwise delays. I think Bitwise pulled out. I'm not sure of that. But the fact that they haven't been delayed or paused yet by the SEC could be a good sign. That could be a surprise. I doubt it. But again, we'll see what the SEC do. But that was interesting because normally it's easy to reject and just fire off a letter. They haven't done that yet, which is surprising. Maybe the SEC heads are still spinning with all the kicks in the teeth they've had over the past couple of months. Now let's get back to Bitcoin. This is the NUPL. NUPL indicator is a measure of the total unrealized profit or loss of all Bitcoin holders. And it's calculated by dividing the market value of Bitcoin by the realized value. And the market value is the current price of Bitcoin multiplied by the number of coins in circulation. Real simple, covered it many times. But the cool thing about this chart, and a big thank you to Sanjay for sharing, is the detail here of where we are with the cycle bottom. Clearly, we are way out of the cycle bottom of 2022, despite some people thinking we're going to hit a worse one. Mr. Sheikh, thank you so much for that. Now, the question is, what will happen? Now, we are in that weird hope, fear stage where we're not sure if the markets are fearful or neutral or bullish, etc. So this is very, very similar to what happened in previous cycles. And the point of this chart is if you look at those orange rings, 1, 2, 3, 4 of them, what has historically happened, with the exception of one time, which I spoke about, the C19 situation back in March 2020, everything has been up from here. So it's kind of like it's a stage of the market where crypto kind of scratches its head and decides, should we go up from here? Yeah, why not? We're ready to do the pre having run. Now, the NUPL indicator can be used to identify overbought and oversold conditions in the Bitcoin market. When NUPL is high, it means Bitcoin holders are in profit. This can lead to a sell-off. And when NUPL is low, it means most Bitcoin holders are in a loss. And this can lead to a buying opportunity as holders buy Bitcoin at a discount. Now, again, you can see here that Bitcoin is starting to dip its toes back into the orange hope fear range of the NUPL. And this is a good sign because it suggests that the lows for the cycle are in. Woohoo. So, again, if history repeats, we'll talk a lot about history today, but this is a positive sign from CryptoCon. It's funny, a con typically is short for convict, so I hope it's not a crypto convict. Anyhow, let's talk about Ethereum. And this is kind of the reason for the thumbnail. It was posted on all of the rags today that Ethereum maxis are up, very excited today because Ethereum registered more long-term holders than Bitcoin so far in 2023. So what exactly does this all mean? Well, this is a chart from Into the Block, and you can see that Bitcoin and Ethereum maintain their unrivaled positions benchmarked against other assets. But where it's different is Ethereum boasts 73.9 million long-term holders, while Bitcoin only has 33.6 million long-term holders. And this is showcasing a significant disparity. Now, Ethereum's long-term holder count surged by 44.2%, outperforming Bitcoin's modest, I think it's about 17% growth year over year. And why is this happening? Well, many believe it's because Ethereum's decentralized finance dominance remains unchallenged, offering way more functionality than Bitcoin. And that's why maybe it has more long-term holders and more adoption because there's more features. So nothing to be spooked about, but just a very interesting statistic. Let's look as well as at TVL because we are talking about DeFi. Bethany, thank you. Despite Ethereum's drop in DeFi value, it still holds a substantial 22.31 billion. Nothing comes even close to this, while Bitcoin lags at about 162 million in TVL. And you can see that the TVL for Ethereum now is down around 16, down from the high of 22.3. No, that's sorry. Bitcoin's on the right. Ethereum still is at 22.31, yes, right now. So you can see the very huge disparity there. And then again, that drives a lot of long-term retention of the actual token. So back to long-term holders, and another interesting but related chart is the hodl waves. Again, we share this once a week or so, so I hope you're not bored. But one thing to emphasize why long-term holders are important is outsiders, people who are not in, say, the Bitcoin space. They think it's crazy that 70% of Bitcoin holders don't touch their coins even after a 70% price drop. However, I think it's because these holders recognize they possess the only immutable scarce commodity known to man. And it's becoming 2x more scarce in April 2024, which is not very far away either. So nothing but positive. But I love that 70% long-term, 70% of holders are long-term and they don't sell. They have no interest in ever selling, which is mad. Now, some long-term holders, however, are selling. For example, a dormant Ethereum wallet, which belongs to a whale, just woke up. It had been dormant for 3 years. And they just moved about 6,100 Ethereum, which is about $11 million worth, to Binance a few hours ago. And these funds had been sitting idle again since early 2021, I think. So people are still selling, pumping their coins to Binance. And the reason they put them there is to sell them. So not everything is dormant as we go forward. Now, next story. Let's talk about Chainlink. We touched on Chainlink a month or 6 weeks ago or 2 months ago, I can't remember, when it hit $5, and I said, wow, this is the buy territory. I didn't buy it myself, but looking hard at it because it's getting a lot of press, and it's all because of the CCIP, which is the Chainlink Cross-Chain Interoperability Protocol. Correct me on that if I'm wrong. But this really is a reliable and secure way to connect multiple blockchains networks together, and it enables complete interoperability between the source and destination blockchains, which means, this is the magic piece here, that financial institutions can securely transfer data and assets between different blockchains, which is essential for the development of the tokenization market, because folks believe that 97% of institutional investors believe that tokenization will revolutionize asset management, and the tokenization market itself is expected to reach about 2.3 trillion by 2028. Remember, that is huge. And the blockchain interoperability market is expected to reach about 1.6 billion by 2028. And I believe Chainlink will be a big beneficiary of this as well. Swift, which is more or less a messaging system, they have successfully demonstrated that it can provide a single point of access to multiple blockchain networks using a secure infrastructure. Now let's look at that infrastructure real quick, because the players so far in this whole Chainlink CCIP, you've got the public chain, which is Ethereum, then another public chain, which is Avalanche, and then a private chain, which is Quorum. I know nothing about Quorum. I haven't dug into it yet, but the key here is the tokenization of all the world's assets is inevitable, and Chainlink is the protocol that is making this a reality right now. We'll see who else jumps in, but it is very, very positive to see. Also, Chainlink is beaten down right now, and it's been on this weird little downward channel, but who knows, could be tasty real soon down at this level, and we'll see when it rebounds. I think it'll rebound when the market rebounds, but I still expect a bumpy September. I'd like to get the bumpiness out of the way early, and then we can rebound and go up and deploy. That's the whole plan. Now, switching gears, talking about Bitcoin mining for a second. This is the Bitcoin mining per unit of computing power per second and how it's developed since 2019. It's the average Bitcoin mining revenue in dollars for 1 terahash provided per second. So in 2019, it was 21.8 cents. 2020, 11.5 cents. 2021, 31.5 cents. 2021 is when the Bitcoin price shot up. So basically, the higher the Bitcoin price, the more the Bitcoin miners get in revenue per terahash provided. 2022, 0.124, and 2023, 0.075. Really sucky. That's, we're talking about a 5-year low here for the amount of income that these miners are getting. You know, on this channel, we love our miners. Now let's look at some other changes in the mining world. You can see here the ASIC advancement is slowing. And what I mean by that is the slowdown in technological progress is influencing the expected operational duration of mining hardware. Now, in the past, rapid pace of advancement rendered old ASIC units basically obsolete. They couldn't plug them in. They burned too much electricity for not enough squeeze, as in joules per terahash that come out of the actual miners. But if you look at this chart, you can see how they've advanced, especially the huge jump between 2013 and 2014 between the Antminer S1 and the Antminer S5. Like, it became 4x better pretty much in 1 year. But since then, we've seen, since about 2020, 2021, only slight marginal improvements in these actual miner rigs. Now we've got the Bitmain Antminer S19 XP Hydro, which is 20.8 joules per terahash versus the Bitmain Antminer S19J Pro 29.5. So we watch these very carefully. And the reason we care is because you don't want to be on antiquated equipment. That'll put you at a severe disadvantage because they burn too much electricity. You want the most modern miners as possible. It's not having crates and crates of miners, plugging them in. If they are super old ones like these S9s, they're not going to get you where you need to be. Hey, Jeff, thank you for being here. Thank you for coming. Now let's look at another continuation of the miner conversation, because this is the time that, you know, miners are getting cheap. By the way, who wants me to do another miner video? Let me know in a comment below. I'm overdue, and I want to start doing them every 2 weeks because there's just so much change happening with these miners. But this is a cool piece from Econometrics. It looks at insider buying activity and selling activity across all the top miners. Now, who's selling, who's buying? Very important to look at. If you are part of a winning company, you don't want to sell your precious equity. You're going to hold it if you think there's upside. So 6 out of the 13 miners have seen net insider buying over the past 6 months. see, I like my numbers and my patterns, and none have seen net insider selling. So you will see, for example, Riot, shares purchased by insiders 1.55 million, shares sold by insiders 1.421. So that's still a net positive. There are still more buyers than sellers, so we don't mind that at all. But no miners are selling. Again, an extremely positive sign that the industry, who know the space best, believe there's only upside from here. People aren't even selling to buy a new car or buy a new condo or whatever. They are just holding on to their equity. And so this is also very, very positive because they believe their equity will appreciate in value as we go forward. So let's move on. I'm going to get this out of the way. So speaking of one of the miners that actually has the most activity here was TeraWULF with these huge amount of buying, 36 million shares. But remember, they also launched. So part of that buying might have been some type of transfer, not necessarily insiders just jumping in and buying. But let's look at the TeraWULF chart and why it's so exciting and why I think we should do a minor update. Is look at this huge range. It basically started the year at about $1, shot up to $4, and then fell down to $2 again, where it is right now. So again, let me know if you want me to do another minor video. Switching gears, talking about Tesla for a second. Of course, the mainstream media is freaking out because Tesla just cut prices of the Model 3. But no, this is actually good news. Let me explain why. They are offloading the Model 3s, huge discounts on both available new and used Model 3s. You can see here, for example, a new rear-wheel drive Model 3 can be had for as low as $29,990 in the US after all discounts and incentives are applied. And the question is, why are they offering such large discounts in the Model 3? Well, it's to clear out the inventory ahead of the new launch of the new version of the car. It's called Project Highland. And they know once it releases, and it's going to release real soon in China, we're pretty certain of that by the sheer numbers of vehicles with covers on them. They keep them very covered up, very secretive. Nobody wants to know the front end, back end design and all the features that the car has. But if the new vehicle comes out, that will pull sales for existing vehicles. Everybody wants the new shiny version, even though it might be more expensive. But when you see a compelling proposition to be able to buy a brand new Model 3 for under $30,000 US, which is cheaper than a Toyota Camry, it's a no-brainer. And they're clear out the inventory, and then they're going to launch the new vehicle ASAP. So watch this space. And this is on the tails as well of the simultaneous launch of Cybertruck, which I think could happen in September. Most probably it will. So in addition, related to EV makers, some people call this a quasi bailout for the traditional ICE makers, ICE being internal combustion engine companies like Ford and GM. The Biden administration is very close with the automakers and the UAW because you can get more votes by giving them what they want, which is a good thing if you're in politics. And I'm not getting political, so I just want to put that out there. But you can see the Biden administration is giving money to these automakers so they can retrofit their facilities to build new EVs. $10 billion of funds originate from a newly announced U.S. Energy Department loan program for clean vehicles. Another $3.5 billion from the Energy Department for battery manufacturing. Another tons of money all over the place for these things. But it is the good thing is the funding reflects the administration's commitment to EV adoption, despite concerns about the UAW union about potential job losses as well. And the UAW is also putting these car makers under pressure to raise salaries substantially by about 40%. So maybe this will kind of allay the fears of Ford and GM, make them avoid big layoffs at the car companies, because if the union wins their negotiation, they won't lay off so many people because the Biden administration will bail them out. So we'll see where this goes. In addition, a little bit of Amazon news. I don't talk about Amazon a lot, but they are doing something very quietly behind the scenes. This is picked up here in this news article. They are apparently building the most powerful advertising machine in the world. Amazon's already worth billions and billions of dollars. They got the retail business, the AWS business, or Amazon Cloud, whatever you want to call it. But the data center is at the center of Amazon's ad business, and the company has invested heavily in robust closed-loop reporting technology. Obviously, the way marketing works, I think what I mean by closed loop is from the time that you advertise something to the time that you buy something. They can track exactly how that advertising performs. And they focus on retail media, which is basically at the point of purchase. You can't get much closer. And Amazon is a master of both expansion and integration, and its current businesses could feed into advertising business in the future. Now, the ad revenue grew about 22% year over year, I think, and it's expected to become a $100 billion in revenue business by 2025. Of course, it'll be highly profitable as well. We're talking software margins on this revenue too. So that could ultimately compete with the AWS business, but also be part and parcel of it as well. Speaking of another IA type play, Palantir got another bearish rating. It was just downgraded today by Morgan Stanley. Morgan Stanley are terrible at reviewing companies like Tesla. They have literally no clue what Tesla is. And but now they're saying Palantir could be overdone on AI optimism. I need to do another, we might be doing a face-off with Palantir against something else real soon next week. So stay tuned for that. Again, let us know if you guys are interested in Palantir. A lot of people talk about it a lot, pump it a lot. I was never a huge fan. I was a little bit back when it was about $10 many years ago and it shot up, and then I thought the CEO was a bit eccentric. Anyway, let's talk about a bit of macro as well. The dividend yield on the S&P 500 versus the 30-year real yield. This is an interesting chart because typically the dividend yield on the S&P 500 is higher than the US 30-year yield. However, it's no longer the case. And this raises a question of whether the stock market is severely mispriced. What I mean by that is, one possibility is that the real yield will fall again, bringing it back in line with the dividend yield. And another possibility is that the dividend yield will rise again to once again exceed the real yield. So the question is, which one will change? Which one will break first? And I do think we're in a different realm right now where things are quite different than ever before. And I'm not a big believer in dividend stocks as well, as you know from this channel. Now let's talk a bit about another piece of macro, US commercial real estate. This from Kobasi. They said commercial real estate has been under some serious pressure. We know that. We've been talking about that for a long time. But it's tough to know what's more surprising. How little recent decline looks when you zoom out. The question is it going to tank more? And I say yes. I'm seeing, when you talk about commercial real estate, there's many different parts. But if you're talking about office space, that has way more to go. Retail storage space, warehouses, that's going to be just fine. So that's the view on that. Now, there is a HEX. I never spoke about HEX on this channel ever. And it's not the HEX you think it is, by the way. It's HEX AI. Why did they pick that name? I'll never understand. But they are grabbing San Francisco office space with a new lease. San Francisco is apparently the hotbed for building AI. Everybody wants to be in the city. And for the first time in 20 to 22 years, it's become very affordable. So like everything in life, it's a big pendulum, swings to the right. Things are very expensive. Same with politics, by the way. And then after things get really expensive, it swings back to the left. It gets really cheap. And then when it gets really cheap, people flood in, buy it, make it expensive again. So good news for San Francisco after all the bad news they've had for a long time. Now, back to jobs, because this really impacts everything, especially what the Fed is going to do. Jobs are back in a so-called recessionary zone. The six-month change in JOLTS higher rate has fallen down to this bad zone. That red line there is minus 0.4. And at some point, this downtrend looks like it's going to continue and it become more about labor weakness and less about the normalization from the C-19 pandemic. Everything is kind of penduluming back to normal. But this is scary. This is recessionary. And this is from James Lavish from his great Substack. And here he talks about the yield inversions have preceded 100% of the last 7 recessions. The 10-year, minus the 3-month spread, inverted on October 27th, 2022. Nearly a year it's been inverted, and that rarely happens in history. And the probability analysis should drive investments to make a decision about this. I do believe, personally, not James Lavish, although history over the last 30 more years says, yes, a recession is coming, but I do believe there's an 85% chance of a recession. I see it everywhere. You know, you got branches of banks shutting down. You've got office spaces, commercial real estate getting smashed, retail going out of business because people are stealing stuff wholesale. They're walking in with trolleys like teams, like a production line, filling as much as they can. They've got the vehicles ready outside and just steal it all. And nobody does anything to stop them. It's become a lawless, weird world, and it's about to get a lot worse too. So anyway, with that, everybody, on that little bit of a sad note, thank you all for being here. Tomorrow's Friday. Woohoo, can't wait for the weekend. And thank you to everybody in Patreon as well, make all this possible. And to everybody in the audience and our lovely mods. I see K8 and TD Tesla and everybody else. And Ryan and Mr. Pipes. Piper, I call you Pipes. Good friend of mine is called Piper, and he likes to be called Pipes. So that's your name. Well, thank you, everybody. See you all tomorrow. Hope you enjoyed the show. Hit the like on the way out if you did. Bye.